Hey guys, I'm back with another update on the grain portfolio. As always, I'm not a financial advisor and I do not make any recommendations on what you should or should not buy or sell. 2 months have passed since my last video, and during this period, a new president was elected in the US and Bitcoin passed the $100,000 threshold. On the value investing front, we have learned that Warren Buffett, the greatest value investor of modern times and the disciple of Benjamin Graham himself, has kept selling stocks and currently holds $325 billion in cash and cash equivalents, while the US stock market's bull run continues. How should a value investor act under these circumstances? Well, I start with a quick update on the progress of the grain portfolio, and then I will give my thoughts on the current market situation. Since the start on March 5th, 2021, the grain portfolio has gained 96.5%, which is now very close to its first doubling. I still hope this will occur before the end of the year, but this is an all-time high for the portfolio and the OMX30 index has climbed as well, so the chance for a short pullback is quite high. Anyway, the grain portfolio has significantly outperformed the OMX30 index during this period, as the index has gained only 27.2%, which is actually a fairly good gain as well. So everything seems fine, right? Why has Warren Buffett then sold many stock positions and built a substantial cash pile? $325 billion is the highest amount ever held by Berkshire Hathaway, and it now accounts for 28% of Berkshire's total asset value. But that actually means that 72% is still invested in the stock market. To understand why Buffett is acting like he does, we can look at some metrics value investors use to determine the value of the stock market. One such metric is the Shiller PE ratio, which is the price-earnings ratio based on average inflation-adjusted earnings from the previous 10 years, also known as the cyclically adjusted PE ratio. It is currently at 38.9, which is the second highest since the dot-com bubble 25 years ago. A Shiller PE value in the range 16 to 24, between these green lines, is considered fair valued. Below 16 it's undervalued, and above 24 it's overvalued, and above 32 it's considered strongly overvalued. So with the current 38.9 value, the market can be considered strongly overvalued. Another metric named after Warren Buffett himself is the Buffett indicator, which is the ratio of the total US stock market value divided by GDP. That is, it basically expresses the value of the US stock market in terms of the size of the US economy. Buffett considered this the best single measure of where valuations stand at any given moment. So with a value 2 times the US economy, we can't blame Buffett for thinking that the market is currently overvalued and the likelihood of a market correction is high. Buffett is not trying to time the market, but he currently is unable to find any good investment opportunities where he can deploy his cash. The main reason is that Berkshire is a major player with a lot of assets, and investment in small companies is not feasible. For us small investors, there can still be many good opportunities available. Looking at the Swedish stock market, large and mid-cap, quite a few companies fulfill 5 or 6 of the Benjamin Graham criteria, even though none of them fulfills all 7 at this time. Among these, we find 3 of the Graham portfolio stocks on the top. It's Betsson, Boliden, and JM. The other 2 companies in the portfolio, SKF and Skanska, have dropped to 5 and 4 points respectively, mainly due to the increased valuation of these companies. We have to wait now 3 more months before I will rebalance the portfolio again, and then we'll see what companies remain in the portfolio and what companies will be replaced. That was all for today. Stay tuned for updates, subscribe and hit the notification bell to receive a reminder when I release a new video. So until next time, as always, stay sharp and follow your passion.